Panoro Energy is a small player, receives little attention, and there's hardly any hype, but 2025 was a record year. Barrels per day, and 2026 begins with concrete growth projects in Gabon. Pure oil upstream, real cash flow and regular payouts, no downstream, no ESG story for headlines, and also no marketing narrative. Today we're taking a look at Panoro, and as always, we'll do so without any marketing filter, just numbers, cash flow, projects, and of course, the risks you should be aware of. So, who exactly is Panoro Energy? Panoro Energy is a pure oil upstream producer based in Norway, operating almost entirely in Africa, with an additional exploration license in South Africa. The core countries are Gabon, Equatorial Guinea, and Tunisia. The strategy is to focus on small to medium-sized profitable fields, partnerships with experienced operators, and an emphasis on low cost and maximizing cash flow. Panoro is no longer an explorer with no hope-based discovery case, but rather a producer with ongoing output and proven fields. Here as well, we'll take a look at how I am invested. I hold a total of 196 shares. My entry price was 1.98, currently in profit at 3.81, and overall I have received a net dividend. The 52-week high and low are between 2 and 3 euros. Analysts set a fair target of 2 here, and investing sets a target of 2.63. I compile all my fundamental data using Investing Pro. If you also want to use Investing Pro for your fundamental analysis, you can get a 15% discount through my affiliate link. Now let's move on to production and the operational base. 2025 was a record year with an average net production of barrels of oil per day, divided into Gabon with 5,813, Equatorial Guinea with 2,919, and Tunisia with 1,530. In 2024, it was 9,228 barrels of oil per day. But the crucial point is also the costs and the break-even point of many assets. Here, it's under $30 per barrel onshore and shallow water, no deep water projects, and also no technical complexity. And that's what makes Panoro so robust. Even with oil prices between $50 and $60. Before we dive deeper, I need to briefly explain 2 terms to you in advance. For example, what does P mean? P reserves are proved and probable. This is oil that has been verified, is economically recoverable, and is very likely to be produced with today's technology. P is fairly certain future cash flow. For Panoro, that would be 42.3 million barrels of net P. What does C resources mean? Contingent resources. This is oil that has been identified in the ground, is also technically accessible, but still requires decisions such as investment decisions, permits, and infrastructure. So C is realistic upside, but not yet guaranteed. And for Panoro, that would be 25.6 million barrels plus additional EG-23 potential. What are infill wells? Infill wells are additional drillings within an existing field, between wells that are already producing. So it's not a new field and there is no exploration risk. The goal is to extract more oil from known reservoirs with low risk and low capex. Infill wells mean low risk cash flow growth. For Panoro, it's clear, liftings of about 3.1 million barrels in 2025, revenues of $199.4 million. An average realized oil price of $65 per barrel. EBITDA in strong phases is double-digit per quarter, in weaker phases lower, but still positive. No structural loss, no cash burn in the core business. Net debt to EBITDA of 1.04, and that is absolutely acceptable for upstream. Now let's move on to cash flow. This is the real quality test, and here is where the wheat is separated from the chaff. An operating cash flow that has been positive for years. Free cash flow fluctuates with CapEx phases. 2025 was strong enough for real distributions. Panoro has returned 411 million Norwegian kroner to shareholders through dividends and buybacks, and since 2022, a total of 795 million Norwegian kroner. That corresponds to 36% of the current market capitalization, and that's real money, not just marketing. Let's move on to the balance sheet and its debts. Panoro is not debt-free, and that's okay. Senior secured notes of $150 million, cash at the end of 2025 was $78 million, net debt of $72 million. The debts are project-driven, secured against productive assets, and have clear maturities. Panoro can service its interest payments, cover capex, and pay the dividend. But of course, if the oil price drops sharply, the leeway becomes tighter, and that's the reality of upstream, not a balance sheet disaster. Now let's move on to dividends and buybacks. Panoro pays out and does so consistently. Here we have a yield, depending on the share price, of about 7% currently, according to Investing Pro, at 12%. All of it comes from cash flow, not from debt, but the payout. This is cyclical. High oil prices mean more leeway. Weak oil prices mean a possible downward adjustment. The dividend policy is as follows. Up to 50% of free cash flow goes to shareholders, which means we also have a very shareholder-friendly environment here. Now let's move on to project growth and the future lever. Gabon Dussafu, the core asset. Gabon Dussafu is the core asset, producing high margins and serving as a cash flow anchor. The operating period extends well into the Mabumo Phase 2 in 2026. For infill wells, FID has already been made, meaning the decision has already been taken. The goal is cross-production towards barrels per day, and the first oil is expected to flow in Q2 2026. Additionally, there's the border discovery, which is currently under decision-making. 3 initial wells are to be created, and new seismic data, Niosi Guduma, will be completed in Q2 2026. This could potentially provide further upside. Now let's move on to Equatorial Guinea, Block G, where we have Sabre and Okume. Here we benefit from long-term operating periods, partnerships with majors, and a low-risk profile for Panoro. We also have a new block, the EG Estrella discovery, where fast-track development is possible via a tieback to existing infrastructure, where representing a classic upside for the company. Then there's Tunisia. Small assets, very low costs, no growth story, but a stable cash flow. South Africa, exploration. Right 376 is at a very early stage and currently has no cash flow relevance. It's an optional upside, but at present there's no basis for valuation. Now let's move on to the valuation and why Panoro appears to be inexpensive. We have approximately $230 million in market capitalization. The stock is currently traded as a small cap. It is illiquid and we have exposure to Africa here, which the market doesn't like. Low multiples and high volatility mean a higher risk premium for us, but also more return potential. What are the risks? Oil price crash, political risks in Africa, asset concentration and small cap fluctuations. But we have no balance sheet risk, no operational chaos, and no refinancing pressure. So the risk is cyclical, not existential. Panoro Energy is not a buy and forget stock nor a core holding, but rather an honest, small cap upstream cash flow player with a record year in 2025, concrete growth starting in 2026, and predictable durations with consistent distributions. Attractive when oil is above $60 to $70, but caution is advised during periods of weakness. So it's ideal for hard asset strategies, cyclical diversification, and risk-conscious investors. What do you think? Should you keep it in your portfolio or is the stock too risky for you? If you watched my last news update video, then you know that the oil price is currently between $56 and $62 per barrel. According to OPEC, that's the average price at which it is expected to be traded. That's the average price. That's already a good benchmark for us for upstream stocks where you might also be able to buy in a bit cheaper. My target range is still between 30 and 50 US dollars per barrel. Here, a few upstream stocks will probably also drop lower, which could present a good opportunity. That's it for this video. If you enjoyed the video, please leave a like. If you haven't subscribed yet, I would really appreciate it if you did so now. Otherwise, I'm always happy to interact with you in the comments. As always, this is not investment advice, it's just my personal strategy. I wish you all successful investing and see you in the next video.